Excellent. Well, good
Okay,
afternoon.
let's go.
Good
Let's
afternoon.
get going.
You go jump in front.
Yeah, so welcome everyone. Thank you all for coming for this session. We've got Michael's screen up, which is fantastic, and we've actually got Michael right in the middle of the presentation. So it reminds me of the old. I don't know if you remember the old Max Headroom.
Yes, I do.
Yeah, he was classic. So I think that was one of my favourites. But what we want to talk to you today is about employee share plans. I'll let Nick cover all that. I'll jump in and ask questions along the way, and if you've got any questions, let me know, because I'll man or the person, the chat room, I think is the appropriate pronoun name.
Right.
So I'll check the chat room as we go through. One of the main ones, of course, is where we do want to provide benefits to employees and loyalty, etc., particularly in this day and age where people are switching around and there's obviously a lot of changes going on. So looking forward to this session. It's going to be one of our mini partner sessions every fortnight that Michael will be running with partners of Lightyear Docs. And the first one is with I Love Accounting and Michael Jeffriess, who's also a director of Lightyear Docs. So if you want to take it away then, Michael.
Yeah, thanks, Grant. Welcome, everyone. I'm certainly quite excited about this new series we're launching called the Partner Solution Series. Grant will be joining myself, but we'll be having special guests on a fortnightly basis. We'll be introducing a number of our partner solutions, such as I Love Accounting. We started briefly discussing the mortgage and PPS registration process through Eventum Optum, our partner. We'll be having some sessions with Tim Munro from Change GPS and probably David Boyer and a number of other things. And we'll be delving into I'll go along here, delving in each week I've got a few details about the solution series. So we'll be doing those partner solutions that effectively complement the Lightyear Doc strategies and documents, but we'll also be looking at insights into other areas, which I know a few people have reached out to me about this, but things like technology applications and stacks, practice management, and many more. And where Grant and myself are happy to take feedback on any areas you'd like to look at. Anyone would like to bring in on these fortnightly Thursdays to have a chat at, look at their solutions, look at how it can complement the Lightyear documents and strategies and our great technical support that we provide. But we want this as a community, and you tell us what you're looking for, what you want, how we can help you more, and we'll see what we can bring to the table. So I think that's going to be quite exciting, Grant, to have this fortnightly series and of all these different solutions.
Yeah, no, look, it's the more that we have, the better it is for everyone as we build up that ecosystem. And we're starting to see now that more and more people are really taking advantage. And I think a lot of our competitors are probably pulling back, not offering that strategic support as opportunities. Whereas we're all, the ultimate for all of us, we are here to ensure that our clients get the best service, and it's a one-stop shop, so they don't need to go anywhere else.
Correct. And so I thought so obviously we've got our product, our partner solutions we've got up there at the moment. We've got obviously it all revolves around our great product and service in Lightyear Docs, but we've got I Love SMSF, Abbott and Morley, Change GPS, Eventum Optimum, and I Love Accounting. And this area today is talking about the I Love Accounting area. So Lightyear Docs and I Love Accounting. I Love Accounting is a partner company to Lightyear Docs and Lightyear Group. It's just some of the things we're talking about. So today's webinar, as Grant spoke about at the start, is in relation to employee share plans, which are rewarding, incentivizing teams. But even more importantly, I think it allows for the future exit. And Grant works a lot in the space, and we do a lot of strategies and solutions around, I guess, individual succession through our estate planning, our family protection products. But this is really focusing on the ability for that business succession piece in relation to exiting your business in the best wealth position you can. So as part of that, we'll be rolling out the ILA employee share plan solution today. Also, I'll have a quick discussion at the end about some of the HR documents that we're rolling out. I've been working with Grant and a few others in relation to employment contracts contractor agreements, and a number of other documents. And the employee share plan solution fits under that whole HR section. And so we've, over the next 2-3 weeks, probably a month, we'll be getting out all those documents onto our Lightyear Docs platform as well.
Certainly looking forward to those. I mean, there's quite a range. We'll talk about that a little bit later. It's fine.
Yeah. So just a little background about I Love Accounting. So it's an outsourced solution provider. We've been working with a number of Lightyear Docs members and a number of other accounting advisory and financial planning firms. So effectively it provides a business-to-business outsourced solution, whether that be, it's not just a lot of people, when they think outsource, they think straight away offshore. Yes, we do have an arm in which we've been working over in particular the Philippines for the last 10 years, but and more importantly, it's really that outsourced solutions provider. So providing solutions that add or bolt on to your current and allow you to, what I've said there is what I think is the most important piece, is to focus on the value add for your clients. So, and often people go, oh, we don't want to outsource, we don't do that. But I think it's all about re-engineering your team and your focus in relation to those value adds. So we're at Lightyear Docs, we're obviously big about the strategies and in terms of adding that value by, I guess, that advisory piece. You'd say the same thing, wouldn't you, Grant? That
yeah, definitely.
I really think this is my own personal belief, but there's going to continue to be a lot of price pressure on the compliance area, in particular tax, and those, obviously there's a skill set still involved, but as cloud applications get better and better, you've got Xero where you can, Xero Practice Management allows you now to pull your financial or your bookkeeping information straight into their taxation system. At a press of a button. Obviously, you've got to check it. You've got to have your work papers and everything behind that. But as we become more and more automated, there continues to be a bigger focus on that advisory piece and providing value for your clients. And clients are looking for that value.
I think probably just on that one, because we did that business planning session last week. I was dealing with someone yesterday and they had over 750 companies. And a lot of them really should have had a successor director solution involved in them, and upgrading obviously the corporate trustee, which all can be done through Lightyear Docs. But not many accountants go down that track when it's such a easy way to ensure that you're looking after your clients for that. Just on that piece, we also don't, we have to remember that, the Commissioner of Taxation himself is completing a lot of documentation, a lot of tax returns already, and that will just get bigger and bigger as time goes on.
I agree. Especially that simplified tax return where you got your just wages, PAYG, few deductions, and they'll move closer and closer to, I guess, self-filling, self-completion by the ATO. So ILA provides accounting, bookkeeping, administration, SMSF administration, compliance, but it's that real business-to-business piece from accountant to accountant, from us to planners to brokers we deal with as well. But what we're dealing with today is really that HR solution we put. We also do deal capital raising solutions. I'll probably do 2 to 3 capital raises a year for various clients. Obviously, I worked on the Lightyear one with yourself, Grant. I've got another couple that are across my table at the moment. I'll be talking about further in the presentation around one of the partners of I Love Accounting, which is Cake Equity. And Cake is providing us a cloud solution in relation to our employee share plans, but they also allow for a solution on the capital raising piece, which I've been working with them, and I'm in the process of getting Lightyear Group up on their platform at the moment, which will provide a streamlined self-service for our shareholders to access their share certificates, for us as a board to communicate with shareholders, and for them to see the shareholding. They can adjust, they can change the details of it. If they change their name or they want to do transfers, it notifies us so we can update ASIC. You can actually have a automated platform through to ASIC as well, but it's a great solution, which we'll go through a bit later on. So Outsourced Solution Provider, this is the new website that's getting launched at the moment for I Love Accounting. So jump on, and it should be up in the next week. We do have a site at the moment, but we're just revisiting and rejigging it around. So jump into the crux of today: incentives. How do you incentivize employees? So there's really four main areas. There's compensation, which is your STI and LTI, and no, that's not a transmitted STI. It's short-term incentive, which is effectively your cash. I guess your bonus schemes versus your long-term incentive plans, which tend to be your employee share plans. I've worked a lot, just a bit of in way of background, I've worked a lot in this space. I was CFO, COO, and I've been in listed entities, unlisted entities, private public companies where we've implemented share plans. So I've been on the coal face, I guess, in relation to not only just ordinary share issues, but also options and a few others. Your second one is your recognition incentives, which is basically your thank you, your pat on the back, which is great. People love to be recognised. I know at Lightyear we use Slack, and we certainly provide a lot of recognition there for good performance on a regular basis, don't we, Grant? Where when people are putting in great input, and I think staff or your team take a lot out of that as well. Reward incentives, which is your gifts, your certificates, your service certificates, and appreciation incentives, which is activities, celebration, and parties. It's always good to get together, have a couple of glasses of wine, a couple of beers, and celebrate our successes. And
even though it's virtual at the moment, which is a bit painful, but
yeah, that's
a
right.
beer's a beer, I suppose.
Correct. And I mean, and people take a lot from people, and staff take a lot from all the different areas, and different things tick different boxes for different people. So it's really important you get to understand your team and what works for them, and what and I think it's good to do a good spread of all those different types of incentives. So when it comes down to what sort of employee share plan, so we're looking at specifically LTIs now. It's how you want to reward your staff. So what you're trying to achieve. Is it reward, or is it succession, or providing them with the ability to assist in grow in your entity? So employee share plans help build a great team culture and alignment. But they can be done very poorly and badly. It's important that you get the right advice and you put the right plan in place, and it's done appropriately. We harp on all the time about having the appropriate documentation in, and the appropriate process and the appropriate strategy, but how important is having the right documentation, Grant? And in employee share plans, if you get this wrong, you can really stuff it up. And you can stuff it up from, I guess, that motivation, that alignment, but you can also stuff it up from taxation perspectives and a number of other legal issues.
Yeah, document. I mean, well, I can't go far enough to say that documentation is the actual key. I've just been reading a piece just only a few minutes ago. I've been reading since this morning on the trusts and family law done by Ian Kennedy, OAM, who's the head of the Family Law Society, and welcomes judges in. But he goes through that whole issue around family trusts. And guess what? The most important thing, the discovery they've got to get straight off, before the accounts, before anything else, is to get the trust document. And more importantly, for everyone listening here, the first port of call if there is a potential separation or a family law issue is they can apply for orders to the court to ensure that let's say it's the husband that he is talking about, the husband appointor doesn't appoint anyone else, doesn't revise or doesn't resign as appointor. So it's absolutely crucial to make sure you have that leading member in place, or that family protection appointor, so that if there is an issue like that, then there's an automatic termination, and also their shares terminate as well. So it takes it out of the hands of the family court.
Yeah, 100%. So the type of plans that we have at ILA are what I would call a simple ESOP and a complex ESOP. As I was alluding to before, it's important on how you want to reward your staff. Is it an income-based focus, or is there growth in income and succession planning? It's quite interesting. I put on Slack this morning to the team, and Grant responded straight away. Grant and I are the early risers in our team. We get in and do
At
do a fair
5
bit of
o'clock in
work.
the morning. Yeah,
Yeah,
I would have hit you up at 4:30 but unfortunately I was out exercising that time. But anyway,
yeah. Well, I was up around there, and then I actually went to a PT session. It was quite interesting. I started talking to the PT about the webinar today, and then he introduced me to the owner of it's a mixed martial arts facility. Not that I do that, but there's a gym as part of it. And we actually started talking, and he wants to have further discussion with me in relation to putting this in for succession and stuff. And he's looking at growing his business and franchising it out. But we're talking about, because he has a number of, I guess, trainers who come in and are part of it, but they're not really, whilst they turn up and they work, they're not really aligned to their mission or growing and building the business. And we started going through that, and we said, well, imagine if they had shares or an ESOP in place, and that you could actually, they start talking about, okay, your gym trainer, he's going to try and add 50 more members this month. He's going to try and add 100 more, and they're going to try and grow the business. They're going to look at cost savings. So they're actually intertwined into the success of the company. They moved from being a 9-to-5 employee to actually having ownership and care and want to actually build and grow it, and which is fantastic, and he was quite excited by it. He actually sent me a text already. I want to have another discussion around that, what we were talking about. So as I said, it all comes down to how you want to reward your staff and what you're trying to achieve. So just going through a simple plan. The simple plan is effectively you have your team, they subscribe in a type of employee share. Generally, we'll issue those at $1. Those shares are then dividend-paying shares. The company has profits, pays dividends back to the employees based on the share. They don't have voting rights. They have no rights to capital. When the employee leaves, the share is effectively transferred and bought back by the company. No capital CGT. It's transferred back at $1. Purely a reward-based scheme. The problem with these, and Grant will know, from the years that we've been revolving around this planet, is that when you get quite short focused in relation to profits, you can get employees who are driven by 12 months or 2 years profit, because they get quite dividend focused, and there's no real focus on, I guess, growth and building and being a part of the growth story. It's very income, and getting a P&L result. Would you agree, Grant?
Yeah, definitely. One of the things that I did years ago with the Strategist Group, which was about 3 or 4 businesses ago, I offered my senior management, rather than going down the subscription, options.
Yes.
And those options were exercisable at a certain market value at that time. So the incentive there for them obviously was to increase the underlying value, and they're only exercisable in the event of a trade sale or an IPO. So sort of kept the control, didn't give away any equity per se at that time. But I do know when we did end up being sold to Tribeca, that a few of my managers took out, $150,000 to $200,000 out of that package. So that worked extremely well. Now, mind you, there was 2 or 3 others, including my brother, who'd left and he'd only left about 6 months before, didn't even think about his options in that process. So if you go down that's even a simpler plan still, and it's also very easy to put in, but you'd need to have, as you said, some determinations, some formulas around that, how they get the options, and more importantly, focus and incentivize them to show them, there is an exit point.
Correct. And it's really important point you said there in terms of dealing with the leaver provisions. You can have good levers and bad levers, and how you treat when the employee or the team member leaves. I've been part of some listed companies where it's been interesting in terms of shares that have been issued by staff, and the point in which they leave and what they get to keep and don't keep. And it's important that you get those planned rules around all of that in place. So simple plan, as I said, involves no capital. It's specialised constitution. It's just an employee share that we issue. When ILA handles it all, we arrange that constitution. We'll put all the documents in place, offers to participate, letters, share certificates. We will be involved with communicating to your staff, discussing it, what it means, and working out who wants to participate and not participate. Everyone doesn't have to participate. It's up to them, but we'll go through and what it actually means, and we'll assist that whole process with you or your clients.
Actually, there's a good question here, sorry, from Phil, who loves to ask questions, why I love Phil, because it keeps it going. With employee share plans, do they need to be offered to all staff?
They do. When there's an employee share plan, that is correct. It's great question, Phil. Phil's actually is fantastic, and Phil has bounced a couple of the areas to me that have actually helped in relation to construction. All my experience has been in the complex plan, so dealing with share plan trust. It was actually Phil who shared this idea, and I thank Phil for in relation to this simple structure and simple plan. We'll be building out a few more in relation to what you were talking about before as well, Grant. So Phil is a great resource to have, and I really like having him as a member. So, and it's great. It sort of shows this sharing community as well, and sharing advice and information. And we're going to continue to grow through that. So effectively, special share class, employee pays, as I said, $1 once each station share goes back. But obviously, it's important to have the right rules in place in terms of that and how that's handled and dealt with. No CGT, lower cost to set up and administer. Downside is, as I said before, they're only motivated by the P&L and dividends. They don't get into that growth story. They don't get the ability, as Grant said before, in terms of getting that, what I call the blue sky. And for me, I believe employee share plans in particular should have the ability to get a part of that blue sky and share in that blue sky. But ILA will, as part of this process, get all those documentations in place, deal with the employees, as I said. We'll also manage your cap tables and your communication through the cloud application, which I'll go through a few of the screens shortly. So
another good question from John Smith, who also another person who loves asking good questions. In ESOP, what does the O mean?
Share option plan, employee share option plan.
Perfect.
So ILA complex plan. This is where we look at using vehicles such as an employee share trust, which we have the documentation ready to go, and we're actually we've implemented a few with some of our members. So we have an employee share trust that has rules around that trust in relation to performance rights, KPIs, hurdles, how those shares vest. So whether it's cliff face or timed, there's other mechanisms we can utilize as well. We try and, whilst I say it's complex, we try and keep it as simplistic as we can as well around a lot of those cliff faces and timings, because the problem with the more complex you become, it's fantastic, but also your accounting and your administration becomes a lot more complex, as you can imagine. We also deal through those leaver provisions as well. So how you deal with good leavers, because good leavers, you may want to allow them to remain as shareholders in your entity. Bad leavers, obviously you don't. But there may be rules where any leaver, you take back those shares. So we have an employee share trust. Effectively what happens is when the entity makes a profit each year, a cash contribution goes across from the employer out of profits, goes into the share trust. Shares are issued based on during time and these KPIs and hurdles to the employees. And the share subscription happens back through to the employee business. Obviously, you can see where through this share subscription and this constant movement, you can start dealing with succession planning. And like if we did a discovery session, I'm happy to go through that in a lot more detail. Obviously, with listed entities, which has been a lot of the space I've worked in, the shares will be acquired and purchased on market through the ASX, or I mean, you've got the Newcastle Stock Exchange as well, but through a share exchange. Complex
do many people use the Newcastle Stock Exchange, or?
No, there's hardly any liquidity on it. I've got a client who's really seems to be set on it at the moment, and around his succession, I'm trying to work with him in terms of I look after a couple of directors, and they actually have another accountant who looks after their broader group. It's in the process of transitioning across to ILA, but he's been offering a few shares here and there. It's all over the place. This is where an employee share plan has been run very, very poorly, not with appropriate rules, not offered to anyone. There's a lot of legal issues that I'm trying to deal with at the moment. but he's actually talking about the Newcastle listing on the Newcastle Stock Exchange and stuff. But I'm trying to push him completely away from that. I'm sure it has its place, but I certainly haven't played in that space. I don't know if you know too many people have, Grant.
No, look, all I know is with the ASX listing, obviously now you need at least a $20 million cap to get in there. So it's obviously dropped down quite a few people there, but Newcastle doesn't seem to be a big one for anyone really. I don't think anyone ever monitors the pricing on there.
No, we got pricing, liquidity. You know, there's a number of issues, but
yeah, you might have liquidity, but if there's no buyers, there's no liquidity.
Yeah, right. It's pretty hard, isn't it?
Yeah.
So here, as I said, with utilisation of that share trust, the key thing is the opportunity to reward with income and capital growth, and also allow for that succession planning. I'm really big, as I said, on the capital growth. Yes, there's a higher cost to administer and manage, but there is access to certain tax benefits. Employees can get effectively up to $1,000 in shares each year, which is a tax deduction for the company. There's no CGT on those until the value goes over $1,000 for the employees. The trustee of the trust has a fiduciary duty to look after the employees, so there's full transparency. The ST uses that contribution as I went before, and the shares are delivered to the employee based on the performance rights of the plan. The company's contributions may be tax deductible. Obviously, when we go through our discovery and we work out what the plan is and the plan rules and how we structure it, then we'll deal with all the tax issues as well and any tax benefits. There are a number of tax benefits for startups, which came in, I think, around 2015, off the top of my head. The complex plan, when you set it up, it requires an initial and annual valuation. So we've got to do a valuation of the company, we've got to do a valuation, work out what the value of those shares are. Then each year we have to do a valuation as well, because we're obviously issuing more shares, we're valuing the shares that are in the pool, the shares that are available, and so we've got to keep doing that annual valuation process. We use an independent panel of valuers. I'm more than happy if we have anyone within our members or is listening who would like to be part of that valuation process and value process, but certainly we keep that completely independent, that whole process, and do not get involved in it. As I said before, this is effectively the process that we go through with ILA share trust plan. So we'll set up the share trust, the rules, we'll work with the rules with you, business or your clients. We'll do the business valuation, we'll arrange all the employee documents. They'll be available on the cloud application, which will include Office to participate. They can be signed by the employee through that cloud application using DocuSign. There's letters, share certificates go out, and also the whole communication piece on an annual basis. There's consultation with employees, the administration service, and we'll manage the cap tables and all that shareholder communication. So ILA has partnered with Cake Equity, great product to market. I can run through demos with anyone who's interested when we do discovery sessions. Cake is a platform, an online cloud platform that manages your cap tables, manages ESOPs, so it manages all those different hurdles and KPIs that we set and put in. So we put all the triggers in place. It's self-service from both the company's perspective, the accountant's perspective can log in, the advisors can log in, and the employees can log in, more importantly. They can actually see on a daily basis or annual basis, whenever they want to choose to log in, they can actually see the number of shares they hold. They may hold options, and when we put that valuation in place, then obviously they can see their value. And it's great because they can actually see tables and graphs of their shareholdings growing and their value in the entity growing. You know, it's a great method to actually really motivate those staff. So ILA works with Cake, and we coordinate, manage, and administrate that whole process for you and your clients. So this is a screenshot from Cake that I've been working on. It's obviously a dummy company, but it sort of shows what when the employee logs in and what they see. They can see what's been vested, what's been exercised, depending what it is, whether it's options. Obviously, we can have ordinary shares as well and other types of shares, the percentage of total equity, and then their vesting rules around each of those. So you can see this one's been paused, this one's ongoing, and it's got the different milestones and where they can click in and have a look at that. It's got the documentation, so plan rules you can click into, the offer letters, the shareholder resolutions, shareholder agreements we can put in. We can put in any documents we like in there. Directors' resolutions. You can see up here communication. So if, for example, Lightyear Group, we have a board meeting or we want to get quarterly communication out, we'll be pushing it out through there. Shareholders can get in, receive it all. There's the full cap tables in there. You can do additional raises. It's a great platform for that, where I've been utilizing it for the capital raising that I've been working on. So you can put your perspectives in there, get documents out to them. They can go in, have a look, full self-service. They can put their application in for shares, and we manage and control that whole process. So this is just a bit of an example. So employee offer letter goes out, offer under employee option plan, you're invited to participate. All the details are set and put in there, goes out, manages when the employee gets it, when they sign it, when it comes back in. And so everyone gets to see it as part of that whole workflow process. So it's got the plan rules, offer letters, as I said, director resolutions built in, all automated document prep and e-signing. Easy access to your holdings and automated share vesting. So you can see we've got a type of vesting period through here, employee share scheme, it says. It shows you the price it is, the exercise price, number that have been exercised, number have been granted and vested. You have full access to your holdings and certificates. It's a single source of truth, which is important in communications portal. We have the ability with Cake to link that through to ASIC. Currently, the way I've been utilizing it is if shareholders go in and make a change, it actually sends me an email, notifies me, and then I go in and it'll say, you need to lodge form 484 to update your cap tables with ASIC. And I just go through that process doing that, and I find that quite excellent to use. So simple plan. This is just a little bit of a pricing mechanism and what actually comes under those simple plan. Obviously through that discovery session, we work out what actually works and what is required for each one. But simple plan, you get the specialized constitution, employee documents, offers to participate, allocations, share trust certificates, or unit trust, certificates and acknowledgement investment and allocations once it's all finalized, in consultation with the employees. So we'll have Zoom, depending on the location, we have face-to-face as well in boardrooms, or we can have Zoom conferences and consult with employees as a group, and consult with the businesses, consult with your clients, consult with yourself through that whole process. We do that full administration annually, get out those statements, manage that whole process, obviously with the assistance of Cake. We can, if we don't want to use the cloud application, then we can manage that process, administration process manually as well. We work through and consider the appropriate business entity and how the structure should be, and work through that with you and your clients. As I said, we provide an online cloud application for the management of this whole process. Upfront cost is $5,500. We have members who have been charging $11,000 up to $15,000 for this. It all depends, I guess, on the number of employees, level of employee consultation required, and involvement. We sort of go through that as the discovery process. Ongoing is confirmed based, again, once on those number of employees. But you're probably looking at similar sort of pricing. Complex plan. The only addition is obviously got the employee trust. There's a bit more complexity in relation to assisting with setting the right targets and hurdles and KPIs and rules. Once again, employee consultation, that annual admin will manage the cloud application for you in that process and get it all structured and set up and ready, and help with any communication through the whole process. Upfront $11,000. But once again, depending on number of employees and complexity of the whole plan. Ongoing, similar again, but to be confirmed depending on the number of employees. And but there's a real opportunity for revenue here for yourself, and also to put in the right reward and succession plans for your clients. And that all gets through white label and everything. So next step is booking a discovery session. We deep dive into your business or your client's business. We discuss the various options. So any further detail to arrange that, you can reach out and book at michael@iloveaccounting.com.au. So just jumping in relation to the next thing, we will be bringing a number of HR documents to the platform. I expect that they'll get up over the next 2 to 4 weeks maximum. That will be there's a HR section, employment and business documents section on Lightyear Docs. That's going to have employment contracts, contractor agreements, subcontractor agreements, and a range of other HR documents, working with Grant, Abbott and Morley, and I've also got as a chair on my group a HR lawyer from both listed and unlisted companies. So it's a great resource to have, and I've been bouncing a number of things off him as well.
Definitely.
So we've got contact details there. We'll take any questions, discussion on any of that.
Yeah, I've got a question from Phil again.
Yep.
What hurdles can be put in place to have the simple plan only apply to certain staff?
That's a good question, Phil. You really need to offer it to all staff, but there's, I guess it depends on how you offer the participation letters and how you deliver and communicate to the various staff. There's certainly, I mean, we can certainly work on a number of hurdles to make it not as appealing to various staff to enter into the plan, but certainly happy to open the discussion and chat to you about that further.
Yeah, certainly, from my perspective is that option idea is not a bad one, because then you can just limit the options to, senior management if you're looking at doing that, or
Definitely.
particular ones. The other side is that it's not often well thought about is most businesses, I mean, if you're going down this track, the business obviously by way of shares or units in a unit trust, don't discount the possibility if they are senior staff and they have got superannuation, that if they did have a self-managed superannuation fund, that they could acquire shares directly in that entity at either at a discount or whatever the rate is, which enables ongoing succession over a period of time. In fact, you could use a buyout mechanism using like senior management superannuation. The key features there, obviously, you're going to need to have obviously SMSFs, which aren't that difficult to establish. Most staff, particularly if they're over age 40, have got $200,000 to $300,000, $500,000 if they take their spouse into account as well inside their SMSF. So it's not a bad little mechanism to look at in terms of a buyout, particularly with all the baby boomers exiting over the next 5 to 10 years. So it's just a bit of a different mechanism. It's not that tax effective one that Michael's saying, but in the long run, it does have, does that capital injection, does that succession, all fits within that umbrella under SEPEPA, being the Succession Asset Protection and Estate Planning Association.
Yeah, 100%. I mean, there's some of the areas we sort of delve into when we look at, I guess the first piece of that discovery session and process is that we talk about incentivization and rewarding and how we structure that. And then we move on and look at succession and the different mechanisms and vehicles we can use, as Grant mentioned then. And that is one process we go through at how we can look at that succession piece on the shares or the that equity within the entity. And certainly there's a large pool of SMSF funds available, and it's a good opportunity. You've got clients who've got businesses worth 5, 10, 15, $20 million. They're not necessarily easy to sell to market. So it's important you sort of look at this process and look at it early and look at what steps you can put into place to allow them a gradual or an immediate exit out of the business.
It's a good question from Chris Becks, and I might get you to answer it, and then I've got a bit of a slant on it as well. Are there any Part 4A implications for changing remuneration from salary to salary and ESOP?
Not that I'm aware of, but I'm happy to throw it over Grant and his thoughts on it. But
yeah, look, I think the main thing is, for example, and I'll take it back many years ago, is when super came in, and obviously back in '92 we did SGC,
yes.
And then we can salary sacrifice above that. Importantly, at that time, this was way back in '94, the commissioner said that it was absolutely crucial that your employment agreement had the ability to add salary sacrifice. So, for example, that would include any bonuses at year end. For example, you can't salary sacrifice a bonus at year end if your employment agreement doesn't enable that. So that's pretty important. In fact, I remember one of my past workshop tutors, Graham Cooper, was saying, well, why isn't superannuation Part 4A anyway? Because you're diverting, money which is salary into a tax-effective vehicle. It's never been looked at, and I would say that the government would be pretty reticent to do that. However, with this one, I would suggest, and I think this is also important from the documents that Michael's going to be putting up onto the system later on, that if we are going to go down that employee share plan route, it's not a bad idea to go through the process of upgrading all of their employment contracts to include that option as well.
Okay, well, I mean, we discussed that recently in relation to our light year contracts as well, when we were sort of going through the whole review process and ensuring that mechanism was in place for certain team members.
Mr. Scandizo, who's on fire today, wants to know, what are the costs with a deep dive?
No cost at all, Phil. That's a free session we'll go through, and then we'll branch out from that.
Oh, I'm sure he's going to be. I hope you're happy with that one, Phil. So that's a good answer. Can't get anything better.
Just for Phil. No, just for everyone. So
yeah. And look,
discussion.
Look, I think this is an important one, which is quite surprising that we've been picking up quite a few people who were ex-Now Infinity users, and they're finding that there's quite severe limitations on the strategic advice, even the basic advice and support they're getting from class in relation to that. We're open. We are happy to answer any questions as part of your subscription, anything on any matter. And when we add other services like this through our partnerships with, for example, ILA, ILA, no shares are owned by Lightyear. In ILA, it's a separate entity, but we see there's huge value there in offering that to you. And again, the advantage of going into that deep dive for free is a perfect one to see whether it's worthwhile. And you'd be so surprised when we have a look at all of these that really a lot of your clients would certainly benefit from an ESOP, I would have thought. I mean, how many have you put in place for a lot of your clients there, Mick? Yeah,
it's quite an interesting question, and I was actually speaking to a Lightyear member on it recently, and they said, look, this is a great solution you've got in place, and I'm working closely with them at rolling it out, and they were sort of suggesting that maybe it's perfect for the 3 to 5% of their large clients. I'm looking at rolling it out. So I've been rolling it out gradually to various different clients at different levels, and I see no reason why. You've certainly got to be a certain size, because there are costs involved and there's administration of the plan and everything. But definitely, 5 to 10% of your clients, which is your top epilage of clients that you want to get it out to. So
that's good. Just as a bit of an update, tomorrow we're sending out the draft competency standards for SEPEPA for opening for 2 weeks. So if you like, if you attended the webinar or registered with the webinar yesterday, you'll get that note from us as well, including the recording, the PDF of yesterday, and also Michael's details. With this session today, the recording will be done later on this afternoon. Will be put up on YouTube, and what I'll do is Michael will send out an email from ILA to all of you with the slides from today, and also the video as well, and any other attendant materials that might be there.
Feel free to reach out and we can have a chat about it, or any other matters that ILA can help with.
Perfect. Okay, there's no further questions. So thanks for that, Mick. That was a great session, and certainly enjoyed by all. So no doubt you'll be inundated at some point in time, which is fantastic.
Wonderful.
Perfect.
Thanks,
Okay, I'll let you close off the session.